Ahoy there, trader, and welcome back. This is the Anti-Investor Trading Podcast. So today, let's talk about the role of discipline in trading and it being the foundation for long-term success. So in trading, discipline is often the unsung hero. It's crucial for navigating volatile markets effectively and sustaining success over the long term. With that said, let's explore discipline a little bit deeper this week. Hello and welcome to the Anti-Investor Trading Podcast. We talk about swing trading stocks, stock options, index futures, and a little bit more recently, I'm back to my roots of day trading, specifically looking at SPX options with an income style trading system. My goal to you is to give you the right tools, the correct rules, the software to assist you, a community to support you, and if you will allow me to be a mentor to show you the way so that you can get real results in the fastest and smartest possible way. So the importance of discipline. Managing your emotions is something that I struggled with very early on in my trading career. If you can prevent impulsive decisions which are driven by fear and greed, then you are on the right path to success. Things that get in the way of that are uncertainty of a trading system. So I would preface a lot of what I'm saying today with you need a rule-based trading system to find, filter, and sort opportunities, almost like or exactly like a pilot would have a pre-flight checklist before takeoff. So we want a pre-trade checklist before going live that gives us structure and it forces discipline when followed. And what that does, it prevents the impulsive decisions. Now, I'm not going to say that those impulses don't go away. They'll always be there. But if you've got a rule-based trading system to follow, the potential for you to deviate gets less and less and less. And because of that, you have strategy adherence. So you have this ability to consistently apply the trading strategy when you have a rule-based trading system. Because the worst thing to happen in anyone's trading is to wonder what to do next. I wonder what I should do. It's far better to know with certainty, with clarity, with confidence exactly what you're going to do, when you're going to do it, why you're going to do it. And the only way that happens is if you have rules to follow regardless of the market conditions. Now, other things that you want to do in addition are to make sure that you have good risk management. And this is always one of those throwaway comments. Make sure that you've got good risk management. What does that actually mean? Have a fixed risk that you're okay with on every trade. And that's going to be different for everyone. The textbooks say to us to have 1 or 2% or less than 4%. There's no hard and fast rule here. It's going to vary, sadly. But the best way of thinking about it is what's your number? And I've spoken about this at length previously. What's your number that you're happy with? If you were to have 5 monetary losses, one after the other, or 10 for that matter, let's make it 10. 10 monetary losses. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Tell me you've not got that tune in your head. 1, 2, 3, 4, 5. Anyway, you've got 10 losses back to back. Can your account withstand that? Now, it's not likely to happen, but it's not impossible for it to happen with any strategy. Just because with my new SPX trading system, I'm expecting about 3 or 4 on average, keyword there, average, per month. Now, in January, I had 8. They weren't back to back, but in the last 10 days, I had a string of losses. And that was just because of a variety of circumstances. I could blame it on market conditions, but that's just what the strategy gave us. But if I just looked at that in isolation, I'm having a bad month. Well, it was actually slightly positive to break even month. So not a complete write-off. In context, and then over 2 months, February so far as I'm recording this is 9 out of 10 trades are winning. So I've just had the opposite happen. And then when we look at the last 4 months since October, since October rather, 74% of the trades are making money. So when you've got more data to look at, then your risk management gets easier. But we want to be able to place the trade tomorrow and the day after and the day after. So we don't want to bet the farm is the point I'm trying to get to, because I know losses are going to happen. I'm going to have a string of losses potentially. I'm going to have a string of wins, but I don't equally want to get excited over the wins because I don't know when they are going to come out. Again, I'm expecting 7 out of 10 trades to make money, there or thereabouts, between 7 and 8, 7.5, to make money. But I don't know which 7.5 out of 10. I don't know if it's going to be a string of 7. I don't know if it's going to be a string of losses. You get what I'm saying here. So we need to not bet the farm. And this also helps us keep the discipline to follow the strategy when there's a little bit of a difficult market condition, when the strategy is underperforming or just has its 1 or 2 losses. Maybe they're back to back. And, because you've got used to a string of wins, back to back to back to back wins, 2 losses together can shake some people's confidence. So stick with it. Be patient with the strategy, with the process, and don't bet the farm. And by being patient and waiting for the setups to develop, it's again going to force you to be disciplined. Again, having those rules to follow forces the discipline, forces the patience. And again, the beauty of this system is we're expecting 1 trade a day. So every day there's an opportunity. And for some people, that might not be fast enough, and that's fine. This isn't the strategy for you. But it means that you can check for a trade, and then forget about it for the rest of the day, essentially. It forces you to be patient, or it allows you to be patient, might be a better way of describing it. And without all of these elements, you're not going to have long-term success, because as you might have heard me suggest between the lines, is it's very easy to be short-term lucky, or unlucky for that matter. But having the discipline, having the risk management, having a strategy, and having that emotional calm and patience, it prevents you from over-trading. It's going to minimize losses, and it's going to help you have a clear perspective when the markets are doing something funky and weird. And if, to be fair, the market's doing something funky and weird somewhere every day. I've been calling a bear movement, not necessarily bear markets. I'm expecting a seasonal flush in the market downwards, because right now, as I'm talking in middle of February, we're for sell-offs and corrective movements, and we didn't have them last year. So I sound a little bit kooky, a little bit crazy by talking bear moves, but they typically happen once, twice a year, and usually it's February, March, and September, October. We're in the season for sell-offs, and that sell-off, that corrective movement, could be upwards and over of 10% in a very short space of time. 1 to 2 weeks, or about 10 to 12 trading days is pretty typical to see at these times of year. So when the market does do something funky, and you've got a process to follow and the patience to adhere to it, you're going to avoid overtrading, minimize the losses. When the market says you should be out, you're out. When the market says you should be in, you should be in. That's what the strategy says. And it helps you keep that clear perspective, and it ensures the long-term success of a trader. And these are all the things that I can adhere to as being the roots of my success. I've been doing this for 30 years now. In one form or another. I've been full-time since 2001. The dates are all blending together. It's getting that long ago. But, it's full-time for, most of my adult life doing this. And I've had a career from it, which is great. Now, most people don't get there. Most people will burn out in 3 or 6 months because they don't have patience. They're over-trading. They're over-leveraging their position. And they have no discipline whatsoever. So it keeps you in the game for long term, just like any regular business. And we need to treat this like a business for long-term success. Some non-conventional aspects that will help you form discipline. Think about your lifestyle choices. Sitting in front of charts all day, every day, even if you've got the ability to do it, is not healthy. I did it for 12 years, and certainly the last 3 of the just constant day trading and doing it all day, every day is what I mean by that, was not the most pleasant thing that I can think of using my time for. So think about your lifestyle choices. How do you want to trade? What would be a perfect scenario? For me personally, I want to have my feet up, read the newspaper, and not really be stressing about what the markets are doing. I want to check in, check for trade, and check out. And if I can do that in less than 20 or 30 minutes in the morning trading session, then all the better. That's how I want to trade. So that dictates the strategy rules that I follow, and it means that I get to spend time doing other things. So I've backed into the way that I want to trade because of my lifestyle choice and the way that I want to live. I've also adapted to be able to trade on a mobile phone. I had a lot, all my technological things stolen in January, and I was forced to trade on my mobile phone. So my perspective on trading on a mobile phone or an iPad has changed dramatically. So this latest system that I developed late last year, just by happy accident, is simple enough to do on a mobile phone. There's no complex mathematical indicators or tools are needed. It's a simple setup that can be assessed quite easily. So it can be done on a mobile phone, which means that I don't need to be at the desk. I can go and exercise, I can eat healthy, I can eat out, I like going for day trips, I like going to zoos, I like going for long walks, I spend time with family. I get to spend time away from the office, for want of a better description, because that's a lifestyle choice. And I can just check in with the strategy, check for the trade, and check out and go and enjoy the rest of my day. And it's a non-conventional way of forcing discipline. I'm going to put the phone in the pockets and I'm going to forget about the markets because I don't need to stress over the fluctuations of market movements. Other things that I do to help with, again, long-term success and also just life in general, I meditate quite regularly. These practices can enhance focus. It can reduce stress. I've got Crohn's disease, if you're not already familiar with that. So I'm trying to do this for my life. And as a side benefit for me, it helps with the trading side because it can be quite a stressful choice. Career choice for that matter. A lot of people do get overwhelmed by it, but it also helps you to have improved decision-making abilities because you can keep calm under stressful circumstances. And again, trading is quite a stressful career choice for most people. And lastly, let's think about journaling. I don't mean just Dear Diary. Dear Diary, I was having a tough day today. Great. If you want to do that, that's great. I did that early on from the point of view of I monitored my emotional frame of mind before, during, and after trades. And I did that for about 3 months before it became apparent what I needed to do. And what I mean by that is I would mark down that I was excited about a trade, I was overconfident about a trade. And again, this is something that I've spoken about at length previously too, on some previous episodes. So keep a journal. And what I was able to find from the mindset point of view was there were some trades where I was overconfident, I was excited, I was like, oh, this is what I've been waiting for. And they were the ones that were the worst performers. They were the ones that always produced a monetary loss. And looking back outside of the being in the moment for the trade, I could look back with a clear mind and say, actually, I didn't follow the process because I was over anxious. I was eager to place the trade. So it kind of forced it in one respect. So whenever I have that emotional reaction, I can pull the reins and say, you know what, let's just take a step back. Let's just go through things a little bit slower and make sure that I'm following the process. And, maybe I delayed the trade, maybe I didn't place the trade as a consequence of that, but my performance increased dramatically because I wasn't forcing trades by getting emotional and, in my case, excited about the trade. I would also keep a diary or a journal or a spreadsheet of your trades. Theoretically, if you've got a systematic approach to find opportunities, that's another way of saying that is a system. Another way of saying that is an algorithm. And I can plug those rules into a computer. There's plenty of software if you're a programmer that will do it these days. I prefer TradeStation. I hire a coder because I'm not a coder. But there's lots of if this then that tools. TrendSpider is one that I'm thinking about, where you don't have to be a coder. You can go if this condition, then that outcome, and so on and so on. You can add to it without coding. And you can plug your system in, or my system, or anyone else's system, and see what the outcome would have been. So you've got an expectation of what may happen, what could happen based on historical data, because there's no ambiguity when you've got a system. rules to follow. It has happened. It is the condition. Therefore, it can be tracked and monitored. And I can see what would have happened historically. Great. Now I've got a benchmark. That's my over-under. Now I can track my actual performance against the benchmark and say, well, I'm expecting this. Did I get it? And if the answer is yes, great. And if I get more, even better. So I'm overperforming, underperforming if I'm following the process. And I also get to see if I've deviated from the strategy because, hey, I should have placed the trade today, but I didn't. Why? If I physically couldn't place the trade, I just wasn't able, and no internet connection, stolen computer, for example, which happened to me in January. I've got a reason for it. But if it's something like human error, then I get to track that, and I can either make course corrections or behavioral corrections because of that. So without journaling, we don't get to check our performance, both physically, emotionally, and also it'll keep you on the right track long term. It's also going to help you with the patience and discipline aspects, because what you get to say is, well, I'm expecting 3 or 4 trades on average to be monetary losses. I don't know which 3. They could be back-to-back. They're on average in a month. Again, I could see 4 or 5 in a month. But over a period of months, it averages out about 3 or 4. And again, I don't know which 3 or 4 trades are going to be the ones. But I've got to be able to... I'm only able to have that expectation by keeping it down, having a process, and having an expectation of what historically this has performed like, or the strategy has performed like. So I can say, well, I'm expecting 3 or 4. I've had 3 or 4 this month, so that the chances of me seeing further, while not impossible, become very minimal indeed, and that gives me confidence to place the next trade, the next trade, the next trade, and so on and so on and so on. So, discipline in trading, it is more than just a set of rules. That's the starting point. That's the absolute bare minimum. A systematic approach to find, filter, and sort opportunities. But it also involves a holistic approach to your lifestyle. How do you want to live your life beyond the trading? Do you want to spend it with family, with friends, with loved ones? Again, maybe you've got the day job, so you need to trade around the day job, so on and so forth. But also mental health. You can have good days and bad days. That's going to impact your mental health. You're going to be high as a kite one night, poor choice of words, but you're going to be exuberant one day, and you're going to be maybe depressed another day because you're trading too big position size. So keep it small, keep it real. So keep a track on your mental health. So combine those traditional elements that I've mentioned and combine them with the non-conventional practices like meditation, mindfulness, and the lifestyle choices that I've mentioned. And you can cultivate the mental fortitude to navigate the complexities of the markets and everything that is adjacent to it, because it's more than just the market. I would argue it's a way of life in some regards. Anyway, this is fundamental. All of these points as a pillar to stand on for long-term trading success. So if you like what you heard today, be sure to follow and listen to the very first episode where I map out the first of my 6 most profitable money-making strategies. I will be expanding on my SPX system in the future, or you can go straight to the website to get information on that now. But that's all for today. Thank you for giving me your time and attention and making me a part of your regular routine. Have a wonderful day, and I'll speak to you at the same time next time. Toodaloo Trader. Keep in mind that futures, options on futures, stocks and stock option trading involve a degree of risk that may not be suitable for all investors. There is a risk of loss in every investment that you make, and it's your responsibility to assess the risks of your decisions. Past performance is no guarantee of future performance, and Antivestor provides educational information and does not provide financial advice.